Hey, this is Mark Moppin with Driving Successful Lives. We're a national charity that helps people in need. And one of our most recent campaigns is to make U.S. businesses aware of a major tax credit that they can get. Um, so this call is going to be about that. Like any company with 5 employees or more qualifies for this. And I have one of the most leading experts in the United States to address you today on how your company can receive this refund. Um, during the Trump administration, I think it was 2020, if I'm right, they had the PPP program, and which is one I even got to participate in. But what was going on with the government? They were actually giving companies a choice of two programs: one, payroll protection program, and the other one was ERC, Earned Retention Credit Program. And you had to choose one or the other. And the banks jumped on the payroll protection program because it benefited them. So everybody knows about payroll protection program, but nobody heard about the ERC. Then under the Biden administration, that changed. He made it where you could get both. So the good news is, even if you got the PPP, you still could qualify for this. And if you didn't, you could still qualify. It's been my experience in working with this now that almost most companies in the U.S. qualify for this. And that's why I've asked Jeff Dameron to come on with us today. So I think with that said, Jeff, I'm going to let you address this. And if it's okay with you, I might interrupt you a couple times.
No, absolutely. We'll have an open dialogue and exchange. So, as Mark said, heretofore, before the employee retention credit, which you can think of it as a COVID payroll refund. So, for example, if you had W-2 employees during 2020, 2021 on payroll, then if certain criteria are met, and I'll go over that, then there's a good chance you can get a refund. And it's a grant. You don't have to pay it back. It comes in the form of a paper check per quarter, one per quarter that you qualify for from the U.S. Treasury. And it can be used for whatever the business owner, hospital, staffing company wants to do, unlike the PPP where you had to use it for the payroll. Now, what's interesting, as Mark alluded to before, you had to choose one or the other. For instance, the PPP or the ERC. With the new administration, the new legislation, two things happen. Number one, you can still now get the employee retention credit. And number two, the way to qualify has been expanded. Before, you had to show a revenue decline. What we're really talking about, Mark, is the last 3 quarters of 2020 and the first 3 quarters of 2021. So before, you had to demonstrate a revenue decline. Now, we're calling it its operational impact. So I'll give you an example. For instance, a business had to shut down its operations because of the mandate, the executive order by the governor of their respective state. And there's a list of over a dozen different operational impacts that if you can attest or say yes to one or more, then we have grounds to say you may be eligible and we can assist in getting a refund. So my company is Bottom Line Concepts. We're originally out of New York. Now we're in Miami. Been around since 2009 doing government grant recovery work. Mainly started off with Fortune 500 and Fortune 1000 companies, very respected companies. And to this day, those are our clients as well. We've helped over 20,000 businesses and nonprofits get over $3 billion. So we are subject matter experts in this arena. So back to the eligibility, such things as supply chain interruption, inability to see clients. Another one that is a big one is social distancing, setting up spatial parameters because of the mandates. So how this works is we can set up a 15-minute appointment. The link is below, and my assistant Lindsay can set it up. We'll take about 15 minutes and go over the eligibility requirements and go through everything, and then determine if in fact there's a cause to move forward and see how much we can help you qualify. Typically in about 4 weeks, 3 to 4 weeks, we're able to tell our clients down to the penny how much they qualify for. And then typically it ranges, but on average 3 to 5 months. It may be plus or minus a month or two on either side, but we should be able to, the client should be able to see the refund coming in the form of a paper check, as I mentioned earlier. So essentially a quick overview of the program. As Mark mentioned earlier, before, many companies, hospital staffing companies, businesses, nonprofits, did not know about it or thought that it was not legitimate. So with the
Jeff,
amount of people going and getting it now, it's really becoming mainstream.
one
Go
of
ahead.
the biggest issues that we've ran into, and which is why we're doing this tape right now, is like we would actually send a letter to a university or hospital or a large staffing company, and then we would call them and start to explain it. And a college has got 1,000 employees. They're going to get back, gee whiz, like over $1 million or more, as a general rule, right? So that,
Yeah, it's averaging, it's up to $26,000 per W-2 employee. We're seeing around 10,000, 12,000. Give or take. It all depends on the exact calculations that are involved with each particular client.
yeah. And so instantly, what they say to us, or my staff on the phone, they say, "This isn't real. We would know about it. Our accountant would know about it." And then I've had some of them say, "Well, my accountant has already looked at this. We took it to them, and they said that we don't qualify because we made more money in those years. We weren't hurt financially by it." And they don't understand what you were just saying, that there's a lot of criteria to it. So a company can actually make a lot more money but still qualify, correct?
Yeah, so that's a common misconception. The accountants, the CPAs, have part of the picture. You used to have to show a revenue decline in order to qualify for this, but with the administration change and the regulation change, now if you can demonstrate or attest, say yes to an operational impact, like I mentioned earlier, then there's definitely grounds to move forward and do a full eligibility report. And you don't necessarily have to have the revenue decline, or even the essential businesses can still qualify for this grant, Mark.
Exactly. It was like interesting. I have another customer of mine. Runs an appliance repair facility. In fact, you're the one that helped straighten him out, and I really appreciate that. He said that his accountant said absolutely you don't qualify, and then I got him to finally talk to you, and you explained that he did qualify, and he's in line to get a refund for like somewhere around $200,000. So
And that's
I mean,
exactly right.
yeah.
Yep.
So that's why this video, because people just, it's like, how can this be? It's too good to be true, and that's not the case. So what I'm going to do is Jeff's providing me with all the links, so they're going to be in the description on the video below, and then there's some national press releases out that help add that and give you IRS links on top of that, and so then what you're recommending is that they call your assistant, set up like a 15-minute conversation with you, and you can basically determine if they qualify or don't qualify, and then proceed with it.
Exactly. Yep. We'll be able to quickly go through the qualifications and determine eligibility, and then take it from there.
Actually, based upon what you're saying, even a small company with five W-2 employees, that could be $50,000 or more coming their way. So
Yep.
that's a great program. I guess, what are we missing that we haven't
No,
talked?
I think that covered it pretty well, Mark.
Yeah. So
Just outlining the program, and discussing what was before, what is current, and common misconceptions about it. So encourage everyone to look at it. The program's slated to go for another 24 months, but we never know when these type of programs may end because of funding. So
yeah, so it's important. There's a sense of urgency around getting it done. Besides the fact you could probably use some money. So so I appreciate you being on. Again, the phone number to call to talk to, or to set up a schedule with Jeff, is that 877-506-3999. and Lindsay is the person you'll be talking to, and she will set you up an appointment. And I really appreciate you being on. And
Thank you, Mark.
Mhm.
Yeah.
Thank you. Appreciate it.